Hey everybody, my name's Andrew Ensor-Smith and I've had my own insurance brokerage for the last 26 years. And I've been helping people to scale and structure their insurance portfolios in their time to get more bang for their buck and also to get more value out of their insurances. And today I want to teach you guys the 5 tips to better understand your insurance, because I understand, being a layman, that people don't understand all the technical jargon behind it. I hate these words when I hear it in the insurance industry. I pay my premiums, and now that there's a claim, you don't want to pay my claim. So there's always 2 sides to a story, guys. And the thing is with insurance is that, there's terms and conditions attached, right? So sometimes there's also conditions from the policy holder that they need to disclose. So there's a couple of things that I want to talk about. I want to keep this raw as possible. I want to keep it real. I don't want to cut it. I don't want to paste it. I don't want to change it. I want to keep it authentic, because when you have a claim, we can't erase the past, right? We just got to run with what we have. So it's very important to get that information correct from the very beginning. So I want to go through these 5 useful tips, which I know will help you guys, in your insurance portfolio, and also to add value and help you guys, especially with making some decisions when it comes to insurance. Because let's face it, it is a necessary evil. It's not like buying a cell phone that you love and you can share with your friends and share it. It's a necessary evil. We have to have it. It's a grudge purchase. And a lot of times we overlook things like that. The important parts of insurance, it's also a contract. And that is a contract between the insurance company and the policy holder. And what does a contract mean? It comes with terms and conditions attached to that, right? So I want to unpack 5 tips very, very briefly. It's going to give you guys some nuggets how to understand your insurance portfolio a little bit better, and to give you a little bit of ammunition when it comes to knowing about your insurances. So first things first, I want to talk about the importance of non-disclosure of information. And that is crucial because, understanding that with a contract of insurance, you have the client and you have the insurer and you have the policy terms and conditions that obviously oversees everything. And there's some obligations that is required from the policy holder in terms for the insurance contract to be valid, right? And obviously the proposal form obviously is a declaration of all the pertinent information that you would obviously disclose up front. And then based on that information, the insurance company will make a decision whether they want to accept, whether they want to decline, whether they want to impose special restrictions or conditions on the policy, and at the same time in relation to a premium, and they'll dictate based on your risk portfolio what premium they would charge. Now guys, I want to say up front is, if you're going to have, or you're going to disclose information to an insurance company when you're taking out a policy from the very beginning, you want to make sure that you disclose your loss history from your previous insurance or your current insurance, right? So if you've had, let's say, 20 claims in a period of 5 years, you want to disclose those 20 claims. You don't want to put there 2, because guys, you've got an ID number, right? And what happens is that ID number they put into a system and your history comes up anyway. So rather disclose everything. I don't like to talk about lying. I'd rather say omitting, because sometimes we forget. I know that. Being insurance, I understand our intentions are good, but sometimes we forget because, we've just forgotten, and it's natural. But if you don't understand, rather ask your previous insurer to obviously give you a breakdown of your loss history, so that you've obviously got an accurate account of your total loss history. And then obviously the insurers will make a decision based on that. So obviously, declare your claims up front. So second thing I want to share with you, the second tip is obviously looking for cheap premiums. And I understand right now with coronavirus, I understand also with, coming out of lockdown, people are tight, they're looking for savings. The first call that we get is the insurance broker, right, asking to cut down their portfolio, which is shave premium, etc., in order to save money. I get it, we're all in the same boat. But you want to be frugal with your spending, but you also don't want to be silly with your decisions. And jumping, or getting a cheap premium from a broker or a company, it's cheap for a reason, right? And it's like insurance is like any other commodity in that you get what you pay for. I can buy a brand new cell phone, an iPhone for, let's say, 30 grand. If someone's going to come to me with exactly the same iPhone and it's a knockoff and it's 3 grand, what does that tell you, right? There's a problem with it. Or it's not going to have the basic functions. And a friend of mine did exactly that. He bought a phone exactly the same as mine, boasted about the price that he paid, but when he turned it on, the keypad was all reversed. They couldn't even make calls. So that is the downside. And insurance is exactly the same thing. So you get what you pay for. And what would that mean? It'll basically mean certain things like maybe your excess structure is different. Maybe there's some exclusions on the policy that you're not aware of. Maybe they're talking about you got an open driver policy for your motor. Now you've got a restricted driver restriction on it. So there's certain things that it's cheap for a reason. So you obviously don't want to get caught out. So read your policy quite carefully as well. And the example that I want to use for cheap insurance is we've all got kids, right? And we're all guilty of this. We want to protect them. We also don't want them to pay an arm and a leg because they're just getting started in life, which is natural. But if I'm going to take my kid's car and she's 18 years old or he's 18 years old, just got a license, you can understand that the premium is based on you, the 40-year-old, 50-year-old, etc., as a regular driver with a track record, right? Now, with the 18-year-old that's just come into the market with no driving experience, no credibility, no driving experience, the likelihood of having an accident is quite high. So the insurers will obviously rate the premium according to the risk. So you cannot be paying a cheap premium based on your credentials, when the risk is a lot higher having a youngster. So understand, don't try and cut corners in that way, guys, because you're going to get caught out as well. Another thing which I want to talk about, and for me this is probably the most important tip of all 5, is loyalty. Now, you got to understand that we build credibility, and we build a history with our insurance broker, with our insurance company, and you want to utilize that history to the best of your ability. You want to build relationships, guys, and that's exactly what it is. Hopping from one broker to another insurer to another insurer. Basically, you're not being credible enough, and it's the same as going for a job interview. If I look at somebody's CV and I see that they've been to 20 different companies before me, I'm kind of going to say, do I really want to employ this person because they don't have any sticking power, right? They're not really loyal to anybody in particular. They're just jumping for a better salary, right? And this is the same thing. You want to build up a history with your broker. You want to have that trust. You want to build that relationship. And I'm going to give you an example. I've had a company that's down the south coast. They are an electrical contractor. They've got a massive business, a big fleet of vehicles, and they are busy. And I understand that. And what happened was, they bought 2 vehicles, they never financed it. Somewhere along the line, the communication got blurred. I never received instruction to add it. They drove the vehicle for about 8 or 10 months, and they had an accident with one of the vehicles. Now, the intentions are always good. They assumed there was covered, but somebody slipped up somewhere. Human error, it happens, right? And based on their relationship with me for 25 years, and based on my relationship with my insurers that I've also had for an equally the same amount of time, we were able to make a plan for the client and pay his claim. Now, that is a relationship that had he not had that, and had he been insured anywhere else, or maybe with a call center, where nobody knows his history, they would have straight away just said, sorry, Mr. Client, you never paid a premium, we're not paying your claim. And they're entitled to do that. So understand, loyalty in insurance goes a long way as well. I want to talk about 2 things on my second point, number 4, is the downside of underinsurance as well as maintenance and wear and tear. So you can understand that if you're going to run a business and you're going to declare your stock under your fire section, average is always going to be applied. If you apply for household contents, I understand we're never going to get our house wiped out in a burglary all in one time. So people think, okay, well, I'm only going to pay for X amount because they'll never steal everything. But the thing is, guys, you're underinsured. You're selecting against the insurer by doing that, because in the event of a total loss, the total premium they need to be collecting. So what does that mean? Underinsurance is the amount of your claim divided by the true reflection of the assets at the time of the loss, right? And then they'll times it by your loss. So they work on an average or a percentage. So you'll get paid out a rateable portion towards the loss. And that is why people always say, I got ripped off when I put in a claim, right? It's not that they got ripped off, it's because they underestimated their contents value. So take an inventory form, fill it in, communicate with your broker, and make sure that your sum insured on your business side as well as your personal is always adequate. Now, with regards to a building, we talk about wear and tear and maintenance. Now, understand, if I own a building, I have an obligation as the landlord or as the owner of that building to maintain it, right? So I'm going to give you an example. We can't have debris coming down the roof and filling the gutters with soil, and I've seen plants and trees growing out of gutters. And guys, a rain is going to come, those gutters are heavy already, and what's going to happen with a little bit of downpour, those gutters are going to collapse. Now we go back to our insurer and we say we want to claim because our gutter fell off. Rightfully so, it was the rain that did it, but the proximate cause was not the rain itself, it was actually the weight bearing down from all the debris sitting in the gutter over a period of time. It wasn't an isolated incident as such, and obviously that caused it to collapse. So you obviously want to make sure that you as a building owner maintain your property, fix the broken tiles. I've got monkeys that jump all over my roof, and every now and again I get my houseboy to get up on the roof and obviously start replacing those broken tiles, because if, let's say, a tile is cracked and the water seeps through, the assessor is going to say, but that tile was broken, it's been like that for a while, and I don't have a leg to stand on, because I need to make sure that I maintain my building, right? Cool. So guys, the very last one I want to share with you, the fifth tip in helping you with understanding your insurance, is obviously reading your policy documents. So whether your insurance broker or your underwriter or your insurer directly, if they're going to send you a policy schedule, if they're going to send you amendments, if they're going to send you a record of advice, guys, read this stuff. That is your contract of insurance. Ignorance is bliss, but ignorance doesn't stand up in the court of law. There's no excuse for ignorance, right? Now, we read hundreds and hundreds of policy schedules weekly, and that's what we do because it's our business. All we're asking our clients to do is read one. The thing is, don't assume that everything is covered, because it's not. If it's not on the schedule or it's not reflected on the schedule, guess what? It's not covered. So don't assume that everything is covered just because I have insurance. Rather communicate with the broker or communicate with the insurer and make sure that you are happy with obviously everything that's reflecting on the schedule as well. So I hope that I was able to add some value. If I was, follow us on social media, like our pages as well. And guys, I'm not asking for any money from these tips. All I'm asking is, if you saw value, share this with your friends, share this with your family, share this with your communities. The more awareness we create within our ecosystem, in our communities, the better for everybody. Because when we get that phone call and it's time to claim, we want to pay those claims. So guys, thank you so much. I'll see you on the next podcast. See you on the next YouTube video. God bless. Take care.